India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Yoga se hi hoga, right? That is the common line. But it's International Yoga Day today. Happy Yoga Day to everyone who practices. And of course, Prime Minister Modi is heading to Srinagar for the Yoga Day celebration. So it's going to be an interesting day. But hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio. I'm Sonia Shenoy. Today joining me is Mangalam Malu and Surbhi Upadhyay. Folks, good tidings for the market. It's Friday and it's been a week where the market has flip-flopped, but largely a week of consolidation.
Oh, absolutely. And happy Yoga Day, guys. Happy Yoga Day to all our viewers as well. I can just tell you that, apart from the physical fitness aspect of it, mental fitness, whether you incorporate one asana or two or just a couple of stretches, get something going. Yeah. Forget the body. It really helps your mind. And yes, considering we live in very high-paced markets and a very high-paced environment and a market that has been a literal roller coaster, I think some mind balance really is just what the doctor orders.
Right?
Yeah, that's true.
I think it's the ultimate, right? Because what is it that the world's best software developers or IT companies aim for? They aim for hardware-software integration. That's exactly what yoga does, right? Fixes the mind, body and soul, aligns all of that together. And the best part about this is when we talk about financial freedom, when we talk about, enlightenment and all of that, the biggest goal to pursue is fitness, no other goal. Why is that? Because you can't, get it genetically, you can't inherit it from people, and if you've gotten it once, you still have to keep working at it. So humility, fitness, and, having a good body is not only an important asset for yourself, but for your family.
If there is no health, then the wealth doesn't really count.
It doesn't. It doesn't. And I've been practicing yoga for a couple of years, and I believe it's more for my sanity than vanity, right? So that's something we're going to celebrate through the day, and glad to see that Prime Minister Modi and the government, of course, has brought yoga to the world map. So it's International Yoga Day today, the 10th International Yoga Day. But let's get back to the markets now. The market has also been not too bad, actually. It's been in consolidation mode. Yesterday, we sort of held on to the key levels on the Nifty. But the one thing that's working in our favor is that global cues have been quite stable. So overnight as well, you had the S&P 500 that briefly crossed the 5,500 mark for the first time ever. The Nasdaq has also, it crossed the 5,500 mark and then it cooled off a little bit from there. The Nasdaq also hit an all-time high and then cooled off from there. So largely you'd have to say that, it's not such bad tidings for the global markets, and that's been buttressing our own market as well. The Nifty has been consolidating around those record highs, around 23,560 or so. Flows have thinned out a tad bit, so there was selling by DIIs yesterday. There was buying, a tad bit of buying by FIIs in the cash markets, about 415 odd crores. In terms of sectors, I'm watching out for IT stocks because, globally, Nvidia fell a bit. It was down about 3.5%, so IT stocks were under pressure. Back home, Accenture's numbers, according to me, it's been a bit of a mixed bag because the management did say that discretionary spending is constrained, especially in some of the smaller projects. So I don't know how that's going to shape up. But most brokerages believe that perhaps the worst is over for the IT space. So Morgan Stanley put out a note where they said that Accenture's results and the commentary pointed out to a few positive data points, such as strategy, consulting returning to growth, and a pickup in smaller deals. So yes, discretionary spending is lower, but there is a pickup in smaller deals. So let's see how the IT companies, react to that. Q3, the numbers were a miss. That is the one thing to look at. Okay, by the way, those are some live images of Prime Minister Narendra Modi at the International Yoga Day celebrations. So we'll, of course, keep getting you that through the course of the day. That's in beautiful Srinagar. just looking at that site is making me calm today. But yes, Yoga Day celebrations have been flagged off, and markets are going to be flagged off as well.
Oh, absolutely. And like you're saying, I mean, it's been actually a week of consolidation, and perhaps that's not a bad thing at all. And yes, let's face it, when you rally so much, there is a little bit of a fear of heights, and that's what seems to be gripping markets in the US for sure. And what we saw overnight, the sell-off in not just in Nvidia, a couple of other chip stocks as well, Micron, etc., they're all down 4-5%. So cool-off coming through. What we have is actually slightly weak data on Wall Street as well. So let me run you 3 data points, and all of them were on the weaker side. Now, jobless claims, they came in higher than expected for the week gone by at about 238,000. They fell from the prior week, but not as much as what the market would have hoped for. Housing starts are actually at a 4-year low. The number has come down. There's a decline of about 5.5% in the month of May. So the housing market data was weak. The Philly Fed manufacturing index number came in, and that number has declined from about 4.5% in the prior print to about 1.3% in June. So that's the 3rd week data point. And all of this coupled with the fact that retail sales in the US were subpar as well, the last number that we got. So, you know, again, some of those macro cues perhaps giving traders an excuse to book some profits and get a little light in terms of positioning. Though, of course, the S&P 500 did cross the 5,500 mark. So it hit that high and then the cool-off happened, very similar to what we saw in our markets last week. So let's see how this is playing out. Now, for the dollar, this means that there is a bit of an increase in demand, and the dollar index, by the way, is now inching towards the 106 handle. So watch for that, and there's a pickup in yields as well. So the US 10-year yield is on your screen, 4.26. Let's get the DXY as well, because it's now above 105.5. So the dollar is continuing to, you know, trend higher, and crude remains a watch point for us. Nothing's changed there. I mean, Brent crude is still very much closer to 86 than it is to 85. That's the dollar index. Not the best of cues for us. And again, crude, there's been absolutely no fall throughout this week. Crude has held in this range of 85 to 86. So global cues, short point, are not the best. Coming back here at home, Sonia mentioned IT, so absolutely I'll be watching out for those stocks as well. Remember, the guidance itself has narrowed. Depends on how you want to read it. From 1 to 3%, now it's 1.5 to 2.5. So the upside has also been lowered. So let's see how our street interprets it. Of course, not a strict apple-to-apple comparisons. The Accenture's consulting business started picking up, so that was something good. And they were sounding very positive about Gen AI, continuing to get more business over there. The market, well, for us, again, consolidation week with the Nifty and the mid-cap index. Actually, both these indices are just about 0.5% in the week gone by. It's been the week of the banks because that's the big trade that started off 3.5% higher. That's actually kept the Nifty away from a broader decline. So let's see if we'll get more of that or not. The sentiment perhaps is going to be, as they say, the cliche goes, cautiously optimistic. A lot of the pre-budget consultations have begun. You heard from the capital market guys yesterday. There's a GST meeting coming up over the weekend. So any further deliberations on what they might do. We've seen what the fertilizer move, for instance, has been like, right? With the hopes of some sort of a rate cut perhaps coming in there. So the GST meeting, in general, a lot of tax-related anticipation ahead of the budget probably is going to capture the market's imagination today. Manglam.
Well, it's been a good week so far for bulls because major indices, irrespective of the consolidation, have hit record highs. The Nifty bank has broken out. And the kind of supply that was absorbed this week, you know, full of block deals, large paper being there. So all of that said and done, it's been good. But now that it's moving towards that 23,600, 23,650, there is some supply on the Nifty. And that's something that we've seen in the last couple of trading sessions as well. June 19, the Nifty was, the high was 23,664. From there, it closed about 150 points lower. We had June 20th, which was yesterday, the high 23,624. The Nifty closed about 60 points lower from there as well. And there are reasons for supply at higher levels because of this overbought nature of the market. Where do we see that? Well, one, we have the put-call ratio, which has moved to around 1.3. Typically, tops out at around 1.4, telling you when the market is overheating a little bit. And secondly, the consistent purchase from FIIs in index futures. Yesterday as well, close to around 1740 crores, adding 16,000 longs, covering about 13,000 shorts, telling you that there's not much scope for further short covering because they started the series with 13% long exposure. Now that has inched all the way higher to 57%. And if you take a look at the net contracts in the last 4 sessions itself, it's moved from a negative 24,000 to a positive 72,000. So swing of almost 1 lakh contracts built on the long side itself. We are preparing ourselves for next week, which is also the week for expiry for the June series. And out there, the call writers are active at 23,600. Put writers are active at 23,500. What does all of this imply from a range standpoint? Option writers for the next 1 week expect a range of 23,400 at the lower level to 23,750 for the higher level. What could be the factors that could either break out the market of this range or let it be lower than this range? we have the Nifty Bank, which has broken out this week, 3.5% higher for the week itself, led by, HDFC Bank. IT stocks will obviously be in focus. They showed some signs of life. Yesterday ended at the high point of trade, mildly in the green. So today, Accenture results, like you all pointed out, would be important. And thirdly, we are seeing a fresh round of buying in a couple of these commodity names. So Nifty Metals is something that we'll be keeping an eye out on. Typically, metals rally lasts for beyond just one day. So whether that continues today or not is something we'll be watching out for. And then you have Birlasoft and GNFC, which have entered the F&O ban. India Cement, SAIL, Chambal Fertilizer, all of them have exited F&O ban. So individual stock moves will continue.
Okay, individual stock moves will continue. So let's kickstart the day then. On the equities front, you have Sanjeev Prasad of Kotak Institutional Equities, who says that big market corrections typically stem from 4 areas, which are macroeconomic challenges, leverage issues with banks, companies, government, households, political or social instability, and lastly, natural or man-made disasters such as the pandemic, war, etc. COVID-19 pandemic was the latest one. However, he says he does not see any issues on the first 3 points as imminent sources of risk for the Indian market, and the fourth is impossible to forecast anyway.
One more equity call. Vikas Jain of CLSA says bottom-up data shows that domestic mutual funds have continued buying HDFC Bank and taken up their ownership in the company by 80 basis points. He says it is reasonable to assume that some of this may have come via selling by FPIs, and this may create the required foreign room and take up the weight of HDFC Bank by 4 percentage points in the most popular FPI benchmark by the end of August, exactly the point we were discussing yesterday. Vikash says this would obviously drive $4 billion of passive buying in HDFC Bank. He adds that given attractive valuations, strong earnings growth, a favorable near-term macro with no imminent rate cut, we expect FPIs to buy more banks to bring themselves back to overweight. He says private banks remain the biggest overweight in our CLSA India focus portfolio.
Right, let's get you some money market views then. Lakshmanan V of Federal Bank says the Indian rupee traded at an all-time low of 83.67 per dollar due to increased dollar demand and declining Chinese yuan. Earlier in this week, he says the dollar paired gains following disappointing retail sales data but rebounded later on account of Swiss National Bank lowering interest rates to 1.25% and Bank of England holding interest rates at its June meeting. He also says inflation figures for the Eurozone and United Kingdom were consistent with expectations. In the coming sessions, he expects the USD-INR pair to trade in a range of 83.4 to 83.80.
Okay, and on the bonds, Lakshmanan says government bond yields ended flat for the last 3 consecutive sessions amidst lack of significant cues. As the market awaits minutes of RBI's latest policy meeting, he says market also remains focused on foreign inflows with just a week to go before India's bonds are included in JP Morgan's Emerging Market Debt Index. He adds coming sessions could see the 10-year benchmark bond yield trade in a range of 6.9 to 7.05%.